Benjamin Franklin once said, "An investment in knowledge pays the best interest." You've spent so much time working and putting money away for retirement. The question is, where should I be investing my retirement savings? The stock market. This is probably the first thing that popped into your head when you heard the word investing. So many different products to choose from in the market. Index funds, ETFs, individual stocks, IRAs, 401ks, etc. ad nauseum. If there's anything to remember, it's a gamble.
Of course, the pros over the past 100 years has averaged 8 to 10%. Outstanding earnings. The cons, however, of course, is you can lose 30 to 40% in a matter of 2 months or 2 weeks. We've seen it happen in our lifetime at least 3-4 times. The thing is you want to have a certain component of your portfolio in there, but definitely not money that you're going to need to live on for the rest of your life.
Over history, the stock market has been a great place for people to grow wealth. The problem is it depends on when you get in and when you get out. So if you're in the market, you really need to have an exit strategy. First, you have to have an entrance strategy. Don't buy high and sell low. We see a lot of people do that. So if you can get in low, then as the stock goes up, you're locking your gains in. Now, you may have a big gain, and you're keeping that gain, and you're bragging to all your friends about it, but you haven't liquidated or realized that asset. Keep in mind, in the stock market in particular, you are not up until you're out. Until you liquidate some of that money, all you have is a paper gain. Realize that gain, and then maximize your retirement with that.
Next up is bonds and securities. When a company needs funds or is in debt, they can issue a series of bonds to cover those expenses, allowing investors to receive a fixed amount of interest on the bond. In other words, the same way that you can get a loan from the bank, companies can get bonds from you.
As interest rates go up, bond prices go down. We've been in a very low interest rate environment, and bond prices have been bad. They're not going to get better as interest rates go up. You're going to get trapped in bad bond funds. So be very careful about stocks, bonds, even mutual funds.
Bonds and securities, that's red bucket items, and there's places for that. But however, what we do is we work with a formulary to decide which goes in which bucket and how much goes in each bucket. It's very, very important because if you can't be too top heavy in one and not in the other.
When I say the word insurance, a lot of people probably think about some cartoon animal in a commercial trying to save you 15% or more.
Emily, my offer is the best.
Did you know that life insurance and annuities could be an important part of your retirement plan? From generating tax-free income to creating guaranteed income stream, it's on your side like a good neighbor.
There's a whole lot of confusion out there about insurance products like annuities and even life insurance. There are some good ones, there's some bad ones. And again, these insurance companies would not have these products if they were not good fits for somebody. Doesn't mean it's a good fit for you though. But if you're looking for a lifetime income you can't outlive, there's some annuity options that may make sense. I don't like variable annuities because you can lose your principal. The only annuities I like, secure your principal, make it guaranteed. They grow your money every year, they protect your growth, and then they give you lifetime income you can never outlive. And then life insurance, utilized the proper way, can give you a tax-free retirement. It can even help you by using your death benefit to pay for long-term care. So I look at the new life insurance policies as the Swiss Army knife in the financial and retirement and wealth building community, because there's no bigger place to grow wealth for your future generations than life insurance.
Real estate is another class of investments that has its own set of pros and cons. More than just buying a house, real estate investments could include renting, flipping, or investing in real estate investment trusts. But according to Coach Pete, you may want to avoid that last one.
There's nothing wrong with real estate. Let me say that again. There's nothing wrong with real estate. I have 3 properties myself. I have a big business building, and I've got a townhouse, and I've got a house. So it doesn't make sense to buy something just to hold it if you don't have a use for it. So we use the building, and the building is growing in value. Now, one thing I absolutely hate are real estate investment trusts. They're sold with fancy brochures to get you to pool your money to invest in big buildings and big businesses and lease holdings of real estate. The problem there is they are non-traded REITs. That means once you get in, you can never get out until it becomes public. It's almost like the Hotel California of the investment world. So be very careful about the real estate investment trusts. Nothing wrong with real estate, but one thing I have against real estate is you have to pay real estate tax every single year. So you're paying to own your building. Even if you have it paid off, you still have taxes, insurance, and upkeep. So keep that in mind before jumping in to real estate investing.
Now, let's talk cash, crypto, and coinage. When most of us think of cash, we think of this. When in reality, cash and commodities look a lot more like this.
Who knows? We've seen people make a fortune. We've also seen people that made the fortune lose it back, and we've seen people that lost to begin with. So crypto's very risky. It's just like the stock market. We have to be very careful in that. Gold and silver, good way to hedge against inflation, they say. But the problem I have with silver and gold, it just sits there when you buy it. It earns 0% interest.
The bottom line is, everyone's situation is different. Things to consider: your time until retirement, your desired return on retirement savings, and how much risk you can handle in retirement. Managing your investments is a crucial step in any retirement plan, and it can be daunting on your own. Give us a call at Capital Financial Advisory Group and talk to Coach Pete and the team. We specialize in creating comprehensive financial reviews, including fee reports and risk assessments on your current investments. As a thank you for watching, we will create a comprehensive financial review completely complimentary. Give us a call today and be sure to like and subscribe for more great content.